Welcome back to part 2. You have your list. Okay, now comes the vetting. In part 1, I told you to take recommendations from the analysts. But just because it's rated buy doesn't mean you should buy it. You need to know this company inside and out. First, collect your information specific to the company. We did general research for our ideas. Now we need to look closely at the company itself. The internet gives you access to research firms. S&P, Reuters, Morningstar are 3 of the biggest, but lots of other companies do research as well, including your bank and brokerage firm. If you have a brokerage account already, that brokerage probably has research available to you from several different sources. I deal with TD Ameritrade. They have 5 different sources, for instance, including the ones I just mentioned. So if you have a brokerage account, then great. If you don't, deposit some money, open a brokerage account. You're going to buy some stocks with it, and start using their resources. All public companies are required to provide financial reports. One of the most important sources of information is the letter from the CEO, which is in the front of the annual report. Now, you want to look at that, and you also want to look at all of the financial statements included in your annual report. One of the things you will find is notes to consolidated statements, which will tell you what kind of problems the company is dealing with. In addition, the annual report will give you the number of shares owned by management, product discussion, future plans, etc. Another wonderful resource is the Shareholder Services Manager or Director. This person will talk to you on the phone and tell you all kinds of things if you ask. You will find the phone number on the company's website. While you're working on this, remember it's important to comparison shop. When we came out of the last major slump in 2008-9, I noticed that the U.S. cruise lines businesses had dropped to about half of the historical average. It was obvious we were coming out of a slump, so I figured people would start vacationing again. So I decided to research and buy one. And I thought of Carnival because it was the one that was most common. So I dug up the financial statements and found their big competitors: Norwegian, Royal Caribbean, Viking River Cruises. I found that Royal Caribbean had a much better safety record and customer satisfaction record. They also had more cash on hand and less debt, as well as plans to expand with some very large ships. I chose Royal over Carnival, and as luck would have it, Carnival had a couple of bad accidents. Market share went to Royal. It was a very profitable investment. You need to know the whole business, not just the company. Always research all of the companies that lead the group and follow them as well. A rising tide lifts all ships is a good thing to remember. Now you may ask, how am I supposed to know which ones are the best? I'm not an analyst or even educated in finance. I'll tell you. You don't have to know this, you just use common sense. Look around and just go for what's obvious. Sometimes smart people overlook the obvious. For instance, right now no one is buying coal. So a coal company, regardless of how cheap it is not a good idea. People are buying organic right now, so Hostess Twinkies may not have a lot of growth ahead. Obvious. So as you research, look for red flags, pitfalls, dangers, questions. Any of them, cross that company off your list. And as you go through the next steps, eliminate without prejudice all of them that do not absolutely meet your standards. As you read about the companies on your list, eliminate the ones that are not up to snuff. Remember, stocks don't come with a guarantee. The law mandates full disclosure for public companies, those with stocks to sell. This means they must tell the public about all of the company's financial facts, as well as other material facts, including any risks that the company may face at any time. However, the management of the company always wants to put the best face forward. They don't want to tell you the bad news. Here's a tip In the letter from the CEO at the beginning of the annual report, if he mentions a small problem, you know that it's a large one. Otherwise, he wouldn't have mentioned it. So find the annual report, read the letter, check the notes to consolidated statements. They will give you a full report, a full disclosure of all of the outstanding issues, all of the risks. If there are any glaring problems, a major legal problem, lawsuit, problem with the CEO, close the book on this one. After you've done once over your list and eliminated at least half, check back for part 3 to do your final selection.